podcast. I want to talk to you about the Spendthrift Trust. So many few people know what it is, but I want to teach you how you can save taxes. There are 4 different trusts that we're going to discuss today. Now, to give you a quick information about this, the Spendthrift Trust comes from England back when King Henry VIII started the Church of England. He went to go tax the lords and ladies, and they went back to the Magna Carta to say that he could not do this. So this is contract law that has come from England to the United States way back when we were a colony. The law firm I work on behalf of has inherited a trust that is turning 350 years old in 2023, while we were still a colony. I don't know about y'all, but I'm a first, second, and third generation American. My family's come over from what's present-day Slovakia, at the time was Prussia, and my mom from Ireland. This trust is not your mom and dad's trust. This trust is going to save you in 3 ways. It's going to save you federal taxes. Everybody wants to save federal taxes. It's going to keep your information private. Your LLC and S Corps or C Corps do not do that. And it's going to keep you from paying any judgments if you get sued. I can't stop you from being sued, but if you do get sued, you will not have to pay any judgments. Now, the Spendthrift Trust is legal, patented in the IRS Tax Code 643B, like Bravo. The trust's full name, so you have it, is Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. Irrevocable goes from generation to generation. Complex, it can hold money day to day, month to month, year to year, decade to decade. Irrevocable, complex, discretionary. Whoever is the trustee can make the rules for the beneficiaries. Non-grantor, this makes the trust 100% private. When you start the trust, you're going to have somebody who's not a beneficiary sign up for the trust and then sign away from the trust. You will need their social security number. This is not a speed bump. This is an easy thing to do. If you want to use myself or somebody else from the law firm, we do this free of charge. Most trusts in the United States are what's called a grantor trust. My mom and dad had that. That's what Susie Orman talks about on public television. What happens there is it just avoids going through probate, and then it dissolves and goes away. This trust goes from generation to generation. And then the last part, spendthrift. This has been in front of the U.S. Supreme Court twice. Both times the Supreme Court has favored with this spendthrift trust. And if your CPA or your financial advisor says to you, I'm lying, I have 2 pages of case law I will email to you. Please understand this is as legal can be. Now, how I found out about the trust, in my national real estate group, I was in the Phoenix office at the time. My national real estate group, one of our instructors is Garrett Gunderson. He wrote a book called What the Rockefellers Do. I have a paperback copy of the book, What the Rockefellers Do. It is now called What the Billionaires Do. The Rockefellers Trust, it's the exact same trust you're going to have, the Rockefellers, the DuPonts, the Kennedys, the U.S. presidents. This is the same trust they have. The Rockefellers call their trust the office. It's 7 generations old, and it has almost 400 people under the same EIN, which is the Employee Identification Number. They each have their own separate bank accounts. They're not commingling all the money. I'm not bringing anybody on live because the last time I did that, they were naked, so too bad. So with this trust, like I said, there's 4 different ones. The first trust we're going to talk about is the business trust. The business trust is for 1099 income workers. I can legally say you will save at least 70% or more in your federal taxes. My little cheat sheet here. This is an actual real estate agent here in North Carolina. This is her 2022 numbers. The reason she's looking at the trust right now is she's got 4 houses on the market in the Charlotte area. She's going to make some serious cash when she sells them all. So back in 2022, she filed single. She's divorced. She made $70,000 in 1099 income. She's at 22%, and we are going to save her $7,495.25 in her federal taxes for 2021. Congratulations to her. Her actual taxes, just to give you an idea, were $10,707, so we're going to save her quite a bit of money. Now, whoops, I got the wrong one. Here's another one I want to talk to you about. This is a gentleman who has 2 pizzerias, New York-style pizzerias here in the area. He makes fantastic white pizza. I love his white pizza. He's making about $15,000 a month. and 1099 income. He files jointly with his wife every year, and they're at 22 percentile. So what they're going to do is they're going to save. We're going to save them $30,215.70 every single year. Now, the price of the trust is $20,500. So in year 2024, he's going to open up a third location. In year 2025, he's going to open up a fourth location, pizzeria. That's what this trust can do to help you save money. This is the business trust for 1099 income earners. You might be a realtor. You might be a real estate broker. You might be a business broker. You might have an affiliate marketing company. I have 3 online stores that I run. I save my 1099 income. Now, the beneficial trust. This is for all investors. I don't care if you're a real estate investor, if you're a crypto investor or a crypto miner, if you are doing options trading, if you've got stock market trading, if you're doing forex trading, royalties, if you have NFTs, or you're an actor, an actress, an author, or mineral rights, you're going to save the following taxes year after year and generation after generation. So you're going to save short-term and long-term capital gains. You're going to save interest income. That's for passive investors, forex investors. You get taxed twice for forex investors, interest income and capital gains. If you're doing the BRRRR strategy, buy, rehab, redo, resell, that's interest income. I have 12 notes, interest income. You're going to save that. And then dividend income. If you're in the stock market, if you're doing options trading, if you're doing a day trader, options traders, you are charged 40% on your profits for a year or less, or 60% on your profits for a year or more. Yikes. Save that money with the Spendthrift Trust. So if you're a day trader, a binary trader, everything else, I'm sorry, I don't bring anybody on live because the last time I did it, they were naked, so I don't bring anybody on live. So goodbye to you. Royalty income. So if you are an author, an actress, a songwriter, if you have NFT real estate, NFT crypto, NFT artwork, if you have an oil well, one of my clients inherited his granddad's horse farm in Oklahoma, loves his horses. He actually is renting those horses out to studios. I guess not right now because people are on strike, but he also has 6 oil wells on the land. That's mineral rights goes through the trust. So this trust is going to save you thousands and thousands of dollars a year. Just to give you an idea, if you were doing anything, if you're selling a business, you're going to save either the 15% or 20% that you will pay every single year. One of my clients right now just sold a HVAC company for $1.7 million. Excuse me as I choke on things. We were able to save him at 15%, $255,000. At 20%, he's going to save $340,000. That's 6 figures for his retirement. He's 62 years old. He's getting on Social Security early because he's got bursitis of the knees. And he's 62. His wife's 59. And both of them are like, that's a heck of a lot of money to be saving. That's important. I also have done a restaurant. I had a restaurant in Tennessee that was going to be sold as is for $3 million. We either saved them $460,000 at 15% or $600,000 at 20%. That's long-term capital gains. Now, business trust is for 1099 income earners. The beneficial trust is for any investors. The third trust is for nonprofits, a 501(c) company. I just got mine started. One of the things I just got was Google ad grant. I'm going to get $10,000 a month to advertise my nonprofit. If you want to hear about my nonprofit, it's www.learnwithsallymarie. I'm helping people pay down debt with just one $10 gift. So again, that's my nonprofit, learnwithsallymarie.com. And then the fourth trust I want to talk to you about is for people who are on Social Security. There is a thing called IRMA. I'm going to read this to you because I always have to look at what the correct thing is. It's Income-Related Monthly Adjustable Amount. This coming October, the IRS is going to go back 2 years to 2021 for anyone who's on Social Security and look at their 1040 tax returns to see if they've made more than $91,000. This is going to affect your Part B of your Medicare, which is your doctors and your tests. Currently, people are paying about $166 per month, and if you have made $91,000 or more, you will pay more for that or pay the federal government for this. Now, all the trusts, the business trust, the beneficial trust, the charitable trust, and the senior trust all file a 1041 tax return. So when the IRS goes back to look at what's happening in 2021, they won't be looking at the 1041 tax return. This trust is going to save you taxes year after year after year, and it's going to from generation to generation. If you want to learn more about the trust, my name is Sally Gimmon. I'm on all the social media sites, maybe not on TikTok. Maybe not on LinkedIn. It's been 3 weeks. They're still trying to figure out what my true identity is. But my first name and my last name, you'll find me there. On TikTok, I'm on at Spendthrift Trust. My website is thetrustisyou.com. My podcast is Stop Paying Capital Gains Now. Now, to give you another idea, this is a true thing that we just did. This was back in June. We stopped an upset bid of 5 custom homes. My friend, I called him and I said, I need $157,000. He wired that money to me. We got the 5 custom homes. I had driven past these houses every day whenever I drive. I work from home, so I don't drive that much. So it was going to be $3.5 million that we owed Wells Fargo. We called Wells Fargo when we won the upset bid and said, we need 4 weeks. She says, what are you doing? We said, we're going to have an open house the weekend after Memorial Day weekend, first weekend in June. We will have all the money to you by June 30th. She said, we've waited 3.5 years for this. After we paid the real estate agent a 2% flat commission rate, we paid back Don's information, and then between the two of us, we made $1,239,000. We split it in half, so I don't have to pay capital gains on that. So again, I want to say, if I can save you money, please check out thetrustisyou.com or my podcast, Stop Paying Capital Gains Now. If I can help you save money, please make an appointment with me, because I want to help you save as much money every year. Have a beautiful weekend. I'll be back live Monday, 12:30 East Coast time, 9:30 Pacific time. Take care.